An unsecured loan for a business can be a fantastic product as long as you use it properly. So number one, let's see what we would use an unsecured loan for. That may be for cash flow for the business. It may be for product. It may be for marketing. It may be for leveraging the business for a new contract. Okay, then there are many, many other reasons. We shouldn't use it for holidays. We shouldn't use it for something that's going to be not help generate money. Because let's be sensible here. If we are borrowing money, then we need to see a payback of that money. And if it's costing you a certain amount, if it's costing you $1,000 a month, for example, then you want to be earning $1,200 and $1,400 and $1,600 a month as your payback for borrowing that. Okay, so unsecured loans are usually set over a term of 6, 12, 18, or up to 24 months as a standard rule. And then your payments are amortized over that. What I mean by amortized is if we do a $100,000 facility and we borrow over 12 months, and we're at the end of the 12 months, you will have paid that loan back 100%. Now, the way it works is that I take an application, I grab an asset and liability statement from you so that we can see your capacity as a business and as an individual. We gather from you the driver's license and Medicare card as part of the ASIC rules of knowing who you are. The main material that they use, up to $100,000 to ascertain how much they'll lend, is based on your monthly turnover in your bank statements. So we will generally ask one of two things: copies of PDFs of your bank statements for the business for the last 6 months. But most funders actually ask for an online version, and that allows them to do their analytics against your online version. It's a view-only version, so they cannot access your funds. I have many people say, but why am I giving access to my bank accounts? Well, you're not. It's a view-only access. And they do their analytics against this and say, okay, we may lend up to 80% of your monthly turnover. So if you're turning over $100,000, you may be able to borrow $80,000. If you don't want 80, then you only want 40, just borrow 40. It's designed around what you're needing, but it's also designed around payments that work for you and just do not overextend you. Looking at your bank statements, they also look for delinquencies, overdrawn accounts, payments that haven't quite been made on time, and a few nuances in the industries that give some red flags for people who tend not to make their payments very well. But it works really well with an unsecured loan. Let's use a practical example. So I want to buy stock, and this stock can be repaid over, let's call it 6 months. Use a real live example. So I borrow $80,000 for my business and I go and buy stock. I'm buying stock at my wholesale rate. I'm then selling that stock at my retail rate. And it might take me 6 months to sell all of this stock. So there will be a set weekly payment you make, and you can actually, as you sell your stock, repay higher figures against that loan, which means obviously then you're reducing your interest bill. So let's say we're borrowing it over 6 months, but because we've had a really good sales process, we've actually been able to pay it back over 3 months. Then you're not paying the interest for months 4, 5, and 6. You've only paid the interest up to months 1, 2, and 3. It becomes a very, very good funding facility to use. Now, with that, you have the ability to redraw funds at different stages. So another example may be that we've borrowed this money over 12 months, and we may have paid back $50,000 over the first 6 months. The funder and I will then offer you the ability to redraw that 50 if you can use it, and to effectively roll over this facility again. Now, I said the words if you can use it. Don't use it, don't borrow it, because you're paying money against it. You're paying interest against it, okay? It's a facility designed to best utilize your business and to best leverage your business. I tell people every single day not to borrow if they're not going to use the money wisely. Because why get into debt if you don't really need to? Use debt wisely.